Hi friends, welcome to the channel Abhyas Together Commerce. In today's video, we will discuss about depreciation. Before going to know what exactly is depreciation, let me ask you a question. Suppose if you are asked to buy a basic model mobile or a old model car or a old model computer and asked to pay its original price, will you purchase them? Huh? No, right? But why? Because you may have your own reasons. Few of them may be because they are second-hand equipment, or they are outdated models, or the latest and better models are available than in the market at the same price, and need of the hour, that is due to the latest developments in the technology, there is a drastic change in the products. Because of all these reasons, we don't like to purchase the old equipment by paying more money. This shows that the value of the equipment reduces over a period of time. In business, we term it as a depreciation. So, let us now move into the definition of depreciation. According to Institute of Chartered Accountancy of India, ICAI defines depreciation as a measure of the wearing out, consumption or other loss of value of depreciable asset arising from use, affliction of time or obsolescence through technology and market change. So in simple terms, due to the regular use of a machinery or an equipment, or due to the over a period of time, or due to any technological or market changes, the monetary value of a machinery decreases. This decrease is called as depreciation. Now, let us move to the importance of depreciation. Depreciation is mainly charged to ascertain the correct profit and loss of a particular financial year of an organization. Then it is also important that the depreciation is charged to reduce the income tax liability. Whenever depreciation is charged, it reduces the company's net income. Thereby, it reduces the tax liability. Then to retain the funds for the replacement of an old asset. See, whenever if a depreciation is not provided, then the profits of the organization will be overstated and they can be distributed to the shareholders or the owners as a dividend. Thereby, there won't be any provisions of the funds for the purchasing of new assets. So whenever we charge depreciation, certain amount will be placed as a reserves to buy the new machinery. Then to ascertain the true value of the asset. Whenever an organization is planning to sell the asset, then they can easily ascertain the true value of that asset as on the date of the sale. Then what are the factors required for calculation of depreciation? The date of purchase, on what date the machinery or the asset is coming into the organization, and the cost of the asset, at what value the organization is purchasing the asset, the estimated salvage value of the asset. So at the end of the lifetime of the machinery, when it becomes obsolete, whenever the organization wants to sell the machinery, what is the estimated value they get when they sell that asset? Then the estimated useful life of the asset. Whenever we buy a machinery or whenever we buy an asset, any asset, we estimate that it works for so many years, it can continually work, will have some warranty or guarantee that it can works for these many years, right? Though that is called as an estimated useful life of the asset. Then the type of method of depreciation. This is very important to calculate the rate of depreciation or to calculate how exactly it works. Then there are many methods of depreciation, but as for the exam or academic purpose, the first two, that is the straight line depreciation method and diminishing balance method, were mainly used. And there are some other methods of depreciations also, like the sum of years digits method, double declining balance method, sinking fund method, annuity method, insurance policy method, discounted cash flow method, to name a few. Then what is straight line method? It is also called as fixed installment method. This is most commonly used method and it is very simple and easy to calculate. And every year an equal amount of depreciation is deducted from the value of the asset. Then this uniform amount will be charged till the asset's value get nil. That means the value of the asset becomes zero till it becomes zero, we generally charge depreciation under this method. Then moving to the advantages of fixed installment method. This method is very simple to understand and easy to calculate the amount of depreciation. It also provides a fixed amount of depreciation throughout the lifetime of the asset. Till the value of the asset becomes zero, we calculate the same amount as a depreciation or the same percentage as depreciation. And it is very easy to estimate the amount of depreciation in advance under this method. We can actually estimate what will be the depreciation even before we charge depreciation. And every coin will have two sides, and even this method got certain disadvantages too. Under this method, the value of the asset becomes zero after some time of use, but this generally does not happen. Practically, even if the life of assets completes, even then it works. That means uh, even after the estimated lifetime of an asset is completed, the asset will function. That is completely ignored under this method. Then an equal amount of depreciation is charged even though the capacity of the machine declines every year. In the initial year, the capacity of the machine asset will be very high, and it produces more quantity of products. So and similarly, in the later point of time, when the capacity of the machinery decreases, or when the capacity of the asset decreases, the production will decline. That concept is also ignored, and we charge depreciation equally throughout the life of that machinery. Even in this method, the concept of interest is also ignored. See, 100 rupees today is different, and the 100 rupees 10 years back was a different story. This In this method, an uniform amount is charged. That means when the machinery is purchased, the same amount is charged, and even after 10 years, the same amount is charged. So the concept of interest is totally ignored under this method. Then this method also does not take into the consideration of the seasonal fluctuations in use of the fixed assets. Then the formula for the calculation of depreciation under the fixed installment method is cost of asset minus scrap value. Scrap value is at the end of the estimated life. Whatever is the value of that asset is called as a scrap value. Then the cost of asset minus scrap value divided by estimated life of asset. Suppose if the cost of the machinery is 12,000 and the scrap value is 2,000, and the estimated life of the machine is 10 years, then the depreciation will be calculated as 12,000 minus 2,000, which is scrap value, divided by 10 years, the estimated life of the machine, which comes to 1,000 rupees. So every year 1,000 rupees will be deducted from the cost of the machine. Example, if the cost of the machinery is 10,000 and if it is depreciated at 10%, then in the first year 10% on 10,000 comes to 1,000 rupees. Then in the first year we deduct 1,000 rupees as depreciation from 10,000. So at the end of the first year the value of the machinery will be 9,000. So in the second year, the worth of the machinery is 9,000. From 9,000, we deduct the same 1,000 rupees, which we calculated earlier. So, which comes to 8,000. So in the third year, we deduct the depreciation amount from the 8,000. So it will be 7,000. So in the fourth year, from 7,000, we deduct the 1,000. It's 6,000. So it goes on till the value of the machinery becomes 0. Then moving to the diminishing balance method, it is also known as written down method or reducing balance method. Under this method, a fixed percentage of depreciation will be charged on the net balance of the fixed asset. That means whatever is the worth of the machinery, on that we calculate the depreciation. The net balance is nothing but the value of the asset that remains after deducting the accumulated depreciation. So advantages, it's very easy to understand and simple to implement. And in this we calculate the we take into the account of the depreciation and repair. See, in the initial years the capacity of the machinery will be much more, and it produces more quantity of products, and thereby we get more profits. Whereas in the next coming years, there may be certain repairs, maybe there may be the capacity of the machinery or the capacity of the asset might have reduced, due to which the quantity of the production has reduced, and thereby the profits might have come down. So in the initial years, under this method, depreciation is charged in a in a higher amount of depreciation is charged in the initial year, and in the next coming years a smaller percentage, a less amount of depreciation is charged on the remaining worth of the machinery. So it thereby it matches the both cost and revenue of the business and runs the business smoothly and helps to run the business smoothly. Then it also got certain demerits. The first one is it is difficult to determine an appropriate rate of the depreciation. As the amount changes every year, it becomes a little bit difficulty in calculating the depreciation. And in this method, the asset value of the asset can never be brought down to the zero. And it also results in the lower net income during the initial year. As we are calculating, as the depreciation is charged at a higher percentage in the initial years, definitely there will be a lower net income in the initial years. Then this is not an ideal method for those assets which does not lose their value very quickly. There may be certain assets which are used for a period more longer than they are estimated. So in that particular situation, this method is not exactly appropriate to use. Example, in the same old example, if the cost of the machinery is 10,000 and if the depreciation is charged at 10%, so in the first year we charge 10% on this 10,000, which comes to 1,000 rupees. Okay, so 10,000 minus 1,000 will be 9,000. In the second year, we charge 10% on the 9,000. In the fixed installment method, we have charged the same 1,000 rupees as depreciation. But under written down method, we charge 10% on the value of the asset at the end of the year or at the starting of the year. This 9,000 we charge 10%, which comes to 900. Now at the end of the second year, it will be 8,100. On 8,100 we charge 10% again, which will be 7,290. So on it continues to the next years. Then there are certain important questions given for your exam point of view. Please have a look on this and do practice. Then in our next video, we'll come up with the practical problems on the depreciation, that is on fixed installment method and diminishing method. For any queries, please comment below. Thank you for watching the video. Please like, share and subscribe our channel Abhyas Together.